Hello, my friend Alex Cole, on this fine June 30th, 2022. Last day of the month of June, last day of the second quarter of the first half of the year. And what a first half of the year it has been. How are you doing today?
Great, amazing that we're halfway through the year. I mean, that just seems incredible, but here we are.
Here we are. It's summertime. The kids are out of school. Stock market is still looking very bearish. Why don't we turn to some GoNoGo charts? Let's look at some trends and talk to our audience here on StockCharts TV about what we're seeing in the SPY, the S&P 500 ETF. Looks like a no-go trend to me, Alex.
Yeah, this is the daily chart, and we've been talking, almost ad nauseum about whether or not these bounces in the markets are relief rallies or the start of something more constructive. And we're erring on the side every time that they are just rallies within a no-go trend until the weight of the evidence tells us differently. And so this is the same thing that we've seen this week. We saw a strong rally, and then, of course, we've seen it roll over, and now we're back in strong purple no-go bars with the oscillator testing the zero line, where we'll look to see what happens as it tries to break out of this squeeze. But at the end of the day, we have a new lower high on the S&P.
Absolutely. Last week, the rally, particularly the participation on Friday to the upside, that volatility, I think, encouraged the bulls for sure. And we saw a lot of attention being paid to mega cap growth names, some of the areas of the market that were most beaten down. So let's turn our go no go eye to that really short term. If we looked at just like an hourly chart of the XLK, the technology sector of the S&P 500, we'd be able to see that certainly those relief rallies, if you're trading very short time frames, it identifies that switch to a go trend. But what we know about multiple time frame analysis is that there's a lot of power in trading in the direction of the primary trend, or at least being aware of what's happening on that larger time frame. So, Alex, what do you see here on a 60-minute chart of the XLK?
Yeah, and like we always say, your time frames may be different from ours, or your time frames may be different from some of our other clients. But if you were to playing much shorter time frames and you were looking to capitalize on the relief rallies and take a trade in that direction, the counter trend rally, and try to profit from it, you certainly could go down in time frame. You see the go trends, and you see that pop last week. Now, we would suggest typically, if you are trading against the direction of the long-term trend, is to get those profits quickly. And you probably would want to look towards these counter trend correction arrows as a sensible time to take profit, because you've got in, prices have moved quickly, and now we see momentum retracing, and we get these counter trend correction arrows. So perhaps a good time to take profit. But we also know that trading in the direction of the trend is typically more profitable and more successful. So if you look at this period of the chart here on an hourly chart, we know the daily chart is in a no-go. We know the weekly chart is in a no-go, and that's been the case for a couple of months now. So you're probably more likely to be trading the no-goes. And so you'd have, this one really good trade here. You've just entered a new trade to the downside here with a no-go trend continuation icon supporting that over the last few hours. And so you can see that you can improve your win rate by trading in the direction of the trend. You wouldn't be necessarily getting caught up in the whipsaws of trying to capitalize on these goes. These would be probably small losses. Even this one here, if you stayed with it until the trend changed, you'd probably be close to break even. So instead, what a lot of our clients will do is trade the no-goes when the larger time frame suggests that that's the overwhelming bias. And in that case, you'd be looking at right now being in 2 winning trades out of 3, less commissions, less in and out. And so typically that's what people will do.
Absolutely. And so today, Thursday morning, June 30th, we're seeing further selling in the markets. That trend continuation icon, when we're in a no-go condition, it's going to appear as a red circle. That tells us momentum has resurged to the downside in the direction of the underlying trend. And that confluence of signals, that weight of the evidence, and trading with the primary trend is really helpful. So, Alex, forget about the technology sector. Forget about this pop with the growth equities. Let's look at that longer term chart of the S&P on a weekly basis to start. Now that we know we're coming to the end of the month and the end of the quarter, the end of the first half of the year, it's good to gain some perspective on what we have seen year to date. So what's the trend telling you right now on this weekly basis from the S&P 500?
Well, nobody wants to hear it, but it's not a good picture. We struggled towards the end of the year to hold on to the Go colors. We rolled over, painted some amber bars, tried briefly to get back to a Go trend, but as that happened, the oscillator stayed below or at zero. So that was key, getting back to those two Go bars, but not being able to regain positive territory on the oscillator. Since then, oscillator rolls over, finds resistance at zero, trend comes back to a no-go and really now has taken hold. And the oscillator that whole time since we started to struggle has been below zero or found resistance at zero. And we're now in negative territory, not oversold and not too close to zero at about -3 on strong purple no-go bars. And you can see that we're now moving lower, setting lower lows and lower highs. So the trend is certainly down on a weekly chart.
Absolutely. And I hate to sound like another newscaster, but where do you see the next level of support in this downward trend? Where would you expect to see some buying pressure?
I mean, there is some clustering of buying and selling in this level, these levels here. So that's not too much lower, but when you think about it, it is a fair bit lower, you know. So if you're saying we're at sort of 375, you're talking maybe 345, 350, 3,500 on the S&P, which isn't far away when you're looking at this chart. But if you're looking at the daily chart, that would be quite a drop further.
Absolutely. Now let's look at the character of the marketplace, because last week in particular, through that rally on Friday, we saw mega cap and particularly growth equities really catch a bounce, almost an 8% move in that counter trend rally. So if we look at a ratio chart, look at the relative strength of SPYG. Let's look at growth to value year to date. We did see the entry to a go trend last week for growth versus equity, or excuse me, growth versus value equities. Yeah. But what have we seen in terms of trend continuation through this week's selling pressure?
Yeah, so it looks as if that pop was short-lived. That outperformance of growth has disappeared, and now we're actually underperforming again relative to value stocks. Now, having said that, it's a very, I mean, we've been saying it now for a week or so. We're at some pretty critical points across different markets and looking at different charts. And we are, you know, really struggling around the zero line, trying to figure out whether this is resistance, if we're in a no-go trend, or if it's starting to provide support. And so we, on that pop to the go colors and that outperformance of growth, we did see the oscillator get above zero, and now it's returned to the zero level. So if that oscillator can find support here, then perhaps this underperformance won't continue. But if the oscillator falls back quickly into negative territory, then I would imagine the no-go in that relative ratio may well go on for a bit longer.
Absolutely. We're seeing some sloppy and choppy range-bound movements on both a relative and an absolute basis. So, Alex, let's turn our eye, as we do every week, to some of those macro forces that are at play, specifically interest rates, the U.S. dollar, and the oil story. We've talked a lot here in 2022, as everyone has, about the threat of runaway inflation, about rising interest rates, and the Fed's role in combating that inflation narrative. But let's start with the TNX. And I'd like to start on the daily basis, just looking at the 10-year Treasury yield. So again, this is inverse to bond prices, but we're looking at rates to just get a flavor for higher rates in this go trend and what we could expect in the months ahead. What do you see from a trend perspective, Alex?
Well, the trend is a go. It's come off the high, and we saw some weaker aqua bars. We saw this counter trend correction arrow tell us that we may well struggle in the short term. And the oscillator has accordingly dropped quickly to the zero level, where it has stayed. And we see the GoNoGo squeeze grid building now up to its max. So trend is in place. Go trend is in place. Momentum is neutral. And we will be watching to see if this zero line holds as support. we would think it will, all else being equal. We're sort of, there's a lot of supply and demand both ways at this levels in here, so we'd expect that to be some support as well. And so if that's the case and the oscillator bounces off zero, we could well put in a slightly lower high here. I mean, slightly higher high, higher low. Let's get it right. Let's pay attention, people. Sorry. Let me try that again. A slightly higher low, right? We're moving up in this go trend, higher highs and higher lows. And perhaps after this highest high, now if we find support here, this would be a slightly higher low. So go trend in place, and we'll be watching now to see what happens with momentum.
Absolutely. It feels like the narrative machine is working overtime in these last few weeks, particularly in conditions of uncertainty. Humans are looking for a story and some narrative to couple that. We've seen the headlines that bad news for the economy is good news for the stock market. Potentially a slowing of the rate hike movements that the FOMC is putting into place. We don't know. Anybody who tells you they know what's going to happen tomorrow is a surefire way to lose a lot of money. What we can do is take the would be or the should be or the we believe that XYZ might happen next. Take that out of the equation. Just quantify what's actually happening and have that rules-based approach to trading with what the market is telling us. So, Alex, when in doubt, zoom out. Let's take a look at this TNX chart on a weekly basis to get an understanding of that longer term trend off those COVID lows. Yeah.
So again, trend in place on a weekly chart. You can see that this pullback is very minor when you look at it on a weekly chart. And the oscillator is above zero and is consistently finding support as we move higher. So larger time frame, go. Daily time frame, go. But at important moments.
And if we jump it out to the monthly basis, just to take a look at structurally what the trend is telling us, to get an idea of maybe what duration might look like. So if we look at the left side of the chart, as you had it more compressed, we're above prior highs, so away from some overhead resistance areas and continuing to move higher. What has really been just a reversion to the mean so far in 2020, 21, and here in 22, and we're finally now breaking out to those higher levels here at the end of the second quarter. So it certainly looks to me as though we've got plenty of room to the upside.
Yeah, I would agree with that.
Excellent. So taking a look at some of the other macro forces, I think the US dollar is probably the most important right now in terms of an intermarket force at play with some pretty decisive moves. Alex, let's talk about what you're seeing in the US dollar.
Yeah, I mean, all of these macro forces that may have an impact on what we buy and sell in the equity markets are shaping up in very much the same way if you look at the charts objectively. So dollar the same way we saw with treasury rates, coming off a high but holding on to the go trend. So the trend in the dollar is still a go, and we've had these moments of weakness, we've had these pullbacks, but each time we set higher lows and move on to a higher high. So at the moment, the go trend is still in place. The oscillator seems to have just found support at zero, breaking out of the small squeeze, giving us this go trend continuation icon yesterday. So go trend still in place for the dollar as well.
Brilliant. And can we see this on a monthly basis? We might need to change it over to a DXY or another dollar index chart. Not sure how far back the data goes on UUP, but look at that.
Yeah. So we're
incredible
higher.
spike at the COVID collapse in 2020, but here we have a big base and breakout on the right hand side of that chart.
And we're now significantly higher than the closing prices. This was the the spike on that month, the monthly March 2020, but we closed down here, so you can see how we're significantly higher than any of these closes now, and we're in strong blue bars on heavy volume. So structurally, for all the people calling for the dollar to roll over, from a technical perspective, the dollar looks strong.
Absolutely. All right, let's take a look at the third big intermarket force at play. Really, the mainstay of the rotation through this year into the energy sector. Let's talk about the chart of oil on a. Let's start with the weekly basis for USO, and just get that longer term perspective on the trend. What are you
Yeah.
seeing in this chart here, Alex?
So I mean, the trend is this is an incredibly durable trend. We saw it when after the oil prices went to negative value.
Negative.
We've seen it really rally since, and this has been a very strong, durable trend. And we are now, as we seem to be on so many of these charts, at a critical point. The oscillator is at zero. Trend has weakened, and we will look to see if we find support at zero on the oscillator and the go trend. Then we will look to see if it continues to hold. That's the weekly view. If you come back a little bit here, we do have some resistance up here, but it's still significantly higher than where we are right now.
And for that sort of structural view, let's switch this to a monthly bar, and we'll get a little more history. Obviously, on a monthly basis, that go trend is just beginning. But what you're talking about here in terms of overhead resistance zones, an area of a lot of congestion, buying and selling right around that 100 to 120 mark.
Yeah.
What would you expect in terms of the number of tests and retests of this area, or what would the trend strength need to be to break through an area of overhead supply like this?
It depends. Sometimes if the economic factors are strong enough, we can burst through levels that seem to be very, very strong, or you can see it tested several times, and that's probably more likely. But what we do know with the number of tests of a particular level, that becomes more and more important. So if you test a level and fail more and more and more times, then it becomes less likely to break that level. If you break a level, though, that has been resistance over and over and over again, then it's much more likely then that is a really strong indication that prices are likely to move higher, and then those levels will become support, the concept of polarity. So when there is a lot of support and resistance at certain levels, it becomes very significant. Harder to get through, but once through, becomes often a very powerful move. So we're not trying to predict. We're not saying that over the next few weeks we're going to blow through 120 and we're going to hit 150, but it's entirely possible if we do get through this congestion that there's significant room to go higher. But it might be tough. It might be tough to get through those levels.
Certainly looks to my eye that approaching that area of resistance, investors could maybe expect a period of range-bound sideways movement in the chart of USO. And if we do dial this back down to the daily basis, just in terms of responsible risk management for trend followers, we saw that weakness at the end of last week as the rally in growth equities was coupled with sell-off in treasury yields, and then as well a sell-off in oil. Had a strong week so far this week, Monday, Tuesday, and Wednesday, and here we are on Thursday, re-entering the no-go trend. What really strikes me is what's happening at the oscillator, Alex. Let's talk a little bit about the importance of the zero line.
Absolutely. So we saw the oscillator fail to provide support as the trend weakened, and that was on heavy volume, and it crashed back lower into negative territory. And what's interesting is as prices rallied this week and regained go colors, the oscillator came back to zero but got turned away. That's fairly significant. And so we've seen the oscillator go below zero, retest it, and roll over. So there's no surprise really to see the no-go come back. And so if you are of the bent that the oil trend is durable on a long term and will continue, then perhaps just be careful about buying the dip right now. The daily chart is choppy, and we're seeing bearish momentum and a no-go pink bar creeping into the price chart.
Absolutely. Let's switch our eye to the XLE, the energy sector of the S&P 500, where we see a little more pronounced no-go trend for those shares in the energy space.
Well, the energy, of course, is not just oil, so you can see that the trend has changed a little quicker and a little bit more viciously to the no-go here. We saw it drop out of the go colors, paint an amber bar, and then go into no-go. as the oscillator on heavy volume crashed through the zero line. And so on the XLE, we are in a no-go. There is really no doubt. We've made a lower low, and now we've made a lower high as well, as prices have rolled over again yesterday and today stay lower, and the oscillator is clearly below zero. So on the daily chart of XLE, we are in a no-go, and we're seeing some structural evidence of that no-go as we see the lower lows and lower highs, and with momentum below zero.
Absolutely. Well, thank you for that, Alex. Let's turn our eye to the chart of FedEx. One of the things that was on a lot of investors' minds last week, commentary from Fed Reserve Chairman Jerome Powell to the Senate subcommittee, just about slowing growth and the concept of, are we entering an economic recession or a contractionary period for the whole of the U.S. economy? We know that it's going to take about a year for the folks at the Economic Review Board to come up with their findings about what has happened in 2022. For investors, we can't wait that long for the long-term narrative of whether it's a recession or not. But the concept of growth slowing in the U.S. is on everybody's mind, and the entry into a recession, and what that might mean for further drawdowns, further no-go territory in the stock market. This chart of FedEx, they released some forward guidance for the rest of the year on Thursday night last week. So here we are a week later. We were talking to our subscribers in the GoNoGo Charts newsletter Flight Path this morning Monday morning, about that newly defined go trend on the daily basis. So Alex, catch us up. What have we seen so far this week for FedEx, and what that might mean for growth in the economy and the fact that goods are still shipping?
Yeah, I mean, I think investors are trying to find somewhere to find a buy opportunity. I mean, at the moment, it's not that easy, and I think something as durable and as, in a way defensive as a shipping company, right? We live in the world we live in. We're going to order things, and they're going to get shipped. But from a larger standpoint, perhaps it's bullish that this is the case, but certainly a defensive company in its makeup. And we saw this go trend take hold. We see the pullback, the kind of bull flag situation that we like to look for. These amber bars were really, really volatile, but never got back to no-go. And then that support at zero on heavy volume as we re-enter on a go trend continuation with strong blue bars. So this was the setup we're looking at. And then we've moved further into this go trend. We've corrected, obviously, this week as the market. Of course, correlations move to 1 when the market moves as it has. But this go trend is still in place. This trade is in play as long as the oscillator is at or above zero, and the go trend is painting dark, strong blue or aqua bars. So in a market where there's not much to take comfort in, this is a go trend, and perhaps as it's sort of moving a little jaggedly through it, making these higher highs and higher lows, perhaps if we find support here, price can move higher again.
And can we see this on a weekly basis as well, Alex? Because I know that go trend was just getting started. Just reaching that amber bar, and here we are this week, a little bit more of the downside selling.
So when we sent this out, there was an amber bar here on the weekly chart, which was a positive sign, given that on the daily we were seeing some confirmation of the go trend, and so we saw this drawn out no-go correction, painting an amber bar, which was sort of a bit of a boost, I suppose, for somebody looking to be bullish on FedEx. Now, it's not all doom and gloom. Yes, we've re-entered the no-go. This week has not been good, as we know, across the market. But the oscillator is above zero on heavy volume, and we will see if it finds support here. If it finds support here, we may see a choppy period where it tries to regain amber and even go-colored bars as prices are moving higher still on the weekly.
Very good. The other sector of the economy we want to check in on would be the healthcare sector. In particular, the name Eli Lilly, LLY is the ticker symbol, as an opportunity to the long side, where we're seeing some go trends on both the weekly and the daily basis.
Yeah. I mean, healthcare is outperforming. It's been an outperforming sector. So you try to, like you always say, fish where the fish are. It's not easy. And even within the healthcare sector, relative outperformance doesn't mean pure go trends for a lot of these stocks, but there are a few. Lilly is one that has been performing well, and we saw earlier this week, about a week ago, this go trend continuation icon as the oscillator breaks back into positive territory, and we're seeing strong blue bars just about at or above prior highs. So bullish indications or implications there for LLY.
Absolutely. Thank you for that, Alex. And in our last chart of the day, we've got a fresh momentum signal on the no-go chart for Bitcoin. Tell us what you're looking at.
Yeah, not good for the
crypto enthusiasts.
Crypto enthusiasts. We are in a no-go. Again, we tried to rally really with the equity markets, but that rally pushed the oscillator only as far as the zero line, where we saw a go-no-go squeeze build to a max, and then we've broken out of that squeeze back into negative territory, which gives us this no-go trend continuation red circle as the trend paints stronger blue bars. So if this continues oscillating below zero, we may well look for price to make an attempt to set lower lows from the lows that we saw just about two or 3 weeks ago.
Yeah, on those strong purple no-go bars. Alex, as always, it is a pleasure to look at the markets through the lens of GoNoGo charts. For everybody who's watching this on YouTube, thanks so much for subscribing to StockCharts TV and checking out the GoNoGo charts channel as well on YouTube. But also check out the StockCharts TV on-demand app. You can take this show and all of the other great content with you wherever you go. Thanks also to everybody who joined us on Monday at the Traders Summit. Great time presenting to you folks there. As well, we wanted to invite you to join us July 13th and 15th. We'll be presenting twice, once on some absolute trends and again on relative strength. That's Wednesday, July 13th and Friday, July 15th at the Wealth 365 Investment Conference. So we'll look forward to seeing you all a lot more through the summer. Take care. See you soon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.